Alright folks, welcome back. This is the Tuesday upload for ICT Mentorship, July 21st, 2020. Left hand side we have the dollar daily, right hand side we have the euro dollar daily. Alright, so you can see we had a nice large down candle. We were expecting that run. We hit to the rejection block on this candle here, slammed into that, and we'll be looking for continuation in here. Now, what I don't want to see, it can happen, but I would rather it not happen, come back up in here and work with this range. It's already had an expansion and it's in balance on the downside. So a lot of sell side delivery, not a whole lot of buy side delivery, and we've reached a discount array in the form of a rejection block. So it can have a up close. I don't want it to come back up and drive back up into this level again. Like here, I don't want to see it come back to that classic support, broken turn resistance stuff. We don't want to see that. We want to see this stay open and break lower, taking out this low. Alright, so we got what we were looking for. We wanted to see a definitive break of this low and then get down below here. We're going to look for the same type of thing. We want to see lots of downside, large candles. Mirror image of what we were expecting to see in the dollar. In euro, we have higher prices, large candle, running above the old high, and this candle here, March 9th, that daily high, toast. Okay, beautiful little delivery off of the fair value gap. Again, when price gets up to this level like this, if you're looking at overbought indicators and momentum indicators, they're screaming divergence, overbought, it's near resistance, look for it to sell off. If you look at my Twitter feed, anytime I mention anything about euro dollar, they're all like, okay, it's going lower, it's time to sell, it's time to sell. It just gives you the biggest boost of confidence that you're in the right place, because these individuals are on the outside and they're just trying to figure out stuff. I literally got 7 emails in the last couple weeks from people that are finding leaked content on the internet, okay, and they're saying, hey, I have your whole entire mentorship, but I need help putting it together. Can you help me out? No. No, that's what mentorship is. So like I said, all these videos that you get on the monthly content, they're just a way for you to be able to communicate with me as a charter member. You're seeing the fruits of being in the mentorship here. All right, so when I outline things, the things I'm looking for, the things I don't want to see, and when it delivers, it's just a wonderful experience from a mentor to a student, and then that relationship is what I'm trying to protect here. All right, it doesn't matter that people think they're winning by finding someone that released content that I threw out in 2017, trying to be a hero, and now people still aren't getting it. You can see it on YouTube. They're all looking at stuff. They're labeling things fair value gaps, and they're expecting it to trade down to the fair value gap. They have no understanding of institutional order flow. They have no algorithmic theory behind any of it. It's just become support and resistance and trend lines to them. It's the equivalent, because they're working with things they don't understand. So it's just one of those testimonies of being here is what mentorship is. It's not just watching a stale video that is just communicating a concept that doesn't really give you the experience of me using it with you. Alright, so just wanted to toss that in there for no extra charge. So let's drop into an hourly chart real quick on euro. Alright, so here is the hourly chart on euro after reaching into that fair value gap. I mentioned at this time, I said I don't want to see it be a bear flag. I want to see it just run right up out of there. It did. We had a imbalance in here, buy side imbalance, sell side inefficiency, traded down to consequent encroachment. There, we talked about that yesterday, and the market trades up, breaks this short-term high there. Does not need to close above it. That just tells the algorithm, okay, I broke this, so now go back down into a discount. What is the discount? We have this candle and this candle here, creating a fair value gap right there. Let me show you what I'm referring to. There you go. Alright, again, the tails and the wicks on each candle That's not what I'm looking at. I could care less about that. That is what I allow for price to go against me. The fair value gap is in here. So look how the bodies of the candles are respecting that. Tail goes through a little bit here, goes through a little bit here, and a little tiny little movement there, but the bulk of the volume is seen right in here. So this low to this high, that's what you're looking for your dealing range. So low to high. You can see we traded down to the 62% retracement level and almost down to the 70.5 level, the sweet spot. Didn't quite get to it entirely, but very close to it. But we use 62% retracement in here. We do go below the 50. That means we're in a discount market relative to the range from this high to this low. And the market drops down in on this candle here. That is midnight. We start a new day. And on this candle right there, okay, we are trading at 62% retracement level. We are optimal trade entry. We have a little bit of a tail take us under the 62% retracement level again, and that's occurring at 9 o'clock in the morning, and then advances up to the old high at 1497 and 115 big figure, and then expands up into one standard deviation at 115.37. The highest high is right now in this candle that's painting, and that is at 115.40. Nice round number. So we trade to a big figure. Does it stop there all the time? No. It's going to reach for the liquidity that's above that in the form of 115.10, 115.20, 115.30, and 115.40. Okay, so it's followed all the rules that I teach you in terms of when trades to and through a big figure. Let's drop down into a 15-minute time frame with a breaker. Okay, so we have a low, high in between, this low. So this right here, low, high, lower low, up close candle at the high, extend that out in time, boom, that's what it's accumulating in right here. It doesn't come all the way down to this because it's not necessary, because the algorithm sees this breaker. The market expands to the upside, runs right on into 115 big figure, then smokes it. Expands up into 115.40, and that's it for today. So the market should have some settling down to do. Watch this area in here. I don't want to see it come all the way back down to the 115 big figure or through it. Just watch this candle right there. Okay, so that low is 115 and 6. So we'll call it 115.10 to 115.05, and that's the level I'd be watching to see if we get into that. I don't want to see it come back down and go back below 115. I don't want to see that because we still have a little bit of narrative to unravel with this low on the daily on the dollar index. And that, my friends, is going to be it for today. Quick, short, and sweet, and I will touch base with you tomorrow by way of midweek review. Until then, wish good luck and good trading.